Good morning. The markets are moving and so are you from the BizNews studios. This is a BizNews Daybreak for Friday, the 9th of January 2026. I'm Alec Hogg. Here's the context you need to win the day. Well, big story of the South African morning is another mega mining merger with a strong South African involvement hitting the headlines. Back in 2024, Glencore, the Swiss-based mining house richly endowed with Johannesburgers, had an unsuccessful run at buying another global major, Rio Tinto. This morning, the deal is back on, but this time in reverse. Here's our partners at Bloomberg.
There is a potential deal that would create the world's largest mining company. Glencore is in talks with Rio Tinto Group about a merger. Here is Bloomberg's Clara Fiera Marquez.
So it's been a big couple of years for deal making. Last year was obviously very, very busy, and it looks like we're starting off strong again this year with talks again between Rio and Glencore. They were talking back in 2024. At that point, it was Glencore making a move for Rio. It looks like this time it might be the reverse. They're a very obvious combination. Rio is in need, or was interested, or has been interested in iron ore, and Glencore has a lot better copper assets really than Rio does.
That is Bloomberg's Clara Fiera Marquez. Financial markets are pricing in about 2 rate cuts from the Fed this year. However, Fed Governor Stephen Miron is penciling in at least 6. Miron sees underlying inflation running at an annual rate of 2.3%. Now, that is lower than the current reading of the Fed's preferred measure of inflation, which is 2.8%.
Shelter inflation really lags a lot. And because average tenant rents have caught up to new tenant rents, because market rents have been running at a 1% rate for a couple of years now, I think it's appropriate to sort of think about underlying inflation as abstracting from that a little bit.
Miron went on to say the American economy could add about 1 million jobs without adding to price pressures. Incidentally, you can hear the full conversation with Fed Governor Stephen Miron on the Bloomberg podcast page on YouTube.
The Rio Tinto share price came under a lot of pressure last night, whereas, not surprisingly, Glencore was firmer. Other price movements that are worth looking at, well, the S&P 500 index was flat and the Nasdaq was down by about 0.5%. On Wall Street, Palantir came under some pressure, and there's lots more about that coming up in just a moment. That was down by 2.5%. You might recall that Palantir's in the BizNews portfolios, and it came in at a very low price. We bought Palantir at around $8 a share. In the Shift portfolio, it's 176 now, and, well, we've been progressively cutting the holding, but retaining some. I wonder if we'll be doing that when we talk about the BizNews portfolio at the end of, the last Tuesday of this month. But outside of that, NVIDIA was down by 2%, $185, so that brief run at $200 has now turned around again. Google has gone beyond Apple in terms of market cap after a 1% improvement, and Apple going down by 0.5%. Amazon continues its recent strength. It was up 2% last night. Uber also is doing well recently. That's up by 1.5%. But the star performer in the US for our portfolios was Teledyne Technologies, one of those old economy firms, if you like, that has new economy products. And Teledyne was up by over 3%. Here on the Johannesburg Stock Exchange yesterday, star performer was our star performer, Purple Group, which rose by 4%. And HCI, Hoskin Consolidated Investment, recent deal on selling its 65% of the Whale Coast Mall in Hermanus for 600 million rand. That gave the price a 4% bump yesterday. And Orion, which has been running like a scalded cat, continued to improve. It went to 33 cents a share yesterday. Incredible to think that a month ago, Orion was trading at, 21 cents. So it's had a fantastic improvement. We'll be picking up on all of those stories on BizNews in a little while. But let's go on to that Palantir-related story. The US interest rate cuts are likely to keep Wall Street running, but not all of them, perhaps. The self-diagnosed autistic investing star Michael Burry reckons that further interest rate cuts and further increases in US share prices will simply push an already overheated stock market deeper into overtime. Publicity-shy Burry, who hit the public consciousness through a starring role in Michael Lewis's bestseller and subsequent movie The Big Short, got together with the author for a very rare interview to celebrate the book's 10th anniversary. The full interview, courtesy of our partnership with the Financial Times, is available now for BizNews Premium members. It's marked members only. So I'm afraid you're going to have to join the tribe if you want to listen to this one. I tell you what, it's well worth it. In this segment, though, that we're giving you this morning, Burry gives us pause on the BizNews portfolio's best performer, Palantir. And here's Michael Lewis introducing.
Someone, CNBC or whoever, gets a hold of your 13F. On this 13F, it says Palantir position is especially big. It looks big because the put options, they're way out of the money. They were struck at 50. So, okay, you had to release this information about your fund. You weren't advertising it to the world in any unusual way. You weren't going out and talking trash about Palantir. You just this position gets released.
Right.
And then the next thing I do, I see Alex Karp, who runs Palantir, like going after you for owning puts on his stock. And I don't think I mean, during the financial crisis, you will remember that the head of Morgan Stanley at the time, John Mack, he blamed short sellers for what was happening to him. And they banned short selling of the stocks I think briefly.
Right.
But it's always a really bad sign when people start going after the short sellers. It's
In the United States.
in the United States. And I was thinking, oh my God, I just wouldn't want to be in your shoes. Like you just made a trade. But he's provoked me. I want to understand your trade. It's a bet that Palantir goes way down.
Way down in 2 years.
What do you understand about their business that the market doesn't?
So my belief is that this is a company that had a set of applications that were very expensive to install because you had to hire their consultants, like after you bought the software, just to install it and learn it, right? And Palantir had this reputation in government. Government contracts is a nasty business, and I think they've figured out how to do it and get some contracts.
How much of their revenue is government contracts?
It's fallen off a lot. It was a majority, and now it's like more even.
Okay.
Because during the AI build out, they basically marketed themselves to corporations. Well, corporations have come to them. C-suites of every public corporation have board members, CEOs who feel under the gun to AI something.
Yeah.
And so there's this scramble. And now they're not the only one. They keep saying they're the only ones, but IBM does basically the same thing. Uh-huh. Their business is actually bigger than Palantir's, and they are not really all government. Government contracts are not generally that profitable. And so, IBM's got a really good business inside it, but it doesn't get the credit for a Palantir valuation on that business, even though it is growing fast too. It's growing about as fast as Palantir, or was. And so, let me put it this way. There are, I think, 5 billionaires that came out of Palantir because they own Palantir stock, and the revenue was $4 billion or less, basically $4 billion. So the billionaires to revenue ratio was greater than 1, and I'd never seen that before.
Was that what attracted your attention in the first place?
Well, that's a cute little thing.
Yeah, it's a cute
I was like, wow, how did they get 5 billionaires out of that group? And so at a company that has $4 billion in revenue, and actually stock-based compensation basically weighs almost all their income. They have to pay their people who are doing all this consulting so much in stock that they just use stock-based compensation. Then what they do is they buy that back, and the company would like you to just give them credit for, and what Wall Street generally does is they take the earnings per share and then they add back the stock-based compensation because it's non-cash, and they add it back to the earnings. And I think actually the way GAAP accounts for stock-based compensation skews low versus what it actually costs. The real cost, you can look at how much our company's buying back to offset that dilution. And you can just take that amount and deduct it from cash flow. And so if you do that with Palantir, historically, they don't make anything. So I basically looked at the company and said, you're worth this much and you really don't make anything. If it's a tiny little bit of revenue and you have all these billionaires.
Michelle's a mom who traded in her Fiat 500 for this beast right here. But why the momentous move, huh?
I needed something bigger to keep up with my growing son and his many sports bags.
When you traded in your car with We Buy Cars, was it an easy conversion?
I see what you did there. The process was just so easy. I was given a tablet, had to sign, and that was it.
Basically, We Buy Cars is no mess, no... Okay, it was nice chatting. We Buy Cars, the easiest way to sell your car by far.
Well, we don't have a local equivalent of Michael Burry in South Africa. Maybe Cy Jacobs at 361 comes closest. But when it comes to popular appeal on guidance for investors on investing, South Africa's favorite stockbroker, David Shapiro, is unchallenged. He and I have worked together for a long time. We know each other well. And yesterday, we had an in-depth discussion. And one of the themes that was covered was how Shapiro explains why South African companies are no longer growing, but merely surviving. Solar, water, potholes, those kind of issues. And he argues that we don't need new white papers from Pretoria. We just need to fix the roads and schools, and investment will return. The full interview is on BizNews Radio and BizNews TV, and it's a well worth investment of your time. But here's David on that topic about South African companies which are now being managed on the basis of survival rather than thriving. You describe the JSE as having moved from being a stage for champions to a battleground for fighters. I love that analogy. What did you, though, mean by that? And maybe give us some examples.
Well, it's companies that are just fighting for survival. That's what they're doing. They're just managing the situation. We've got no electricity. Okay, we'll put up solar. We don't complain and moan and kick out government. We'll just get along with it. And so you survive under the circuit. No water. Okay, we'll put tanks in. And we carry on along that kind of way, just adjusting to the circumstances rather than saying, starting a revolution and saying, listen, we've got to change this. We can't do this. I mean, I run every day here, and each day I find a new dam in Joburg, which is a big pothole or crater that has just sunk there full of rainwater. And what do? I run around it. I don't go and say, hold on a sec. Our roads need rebuilding. We've got to do this, or we've got to create an environment that allows us to have it. You can't let the infrastructure just evaporate or just be destroyed. Alec, I started in 2007, 2008, and I remember I'd come back from Australia and I was doing my normal runs around the country, and I started to see the institutions that make a company deteriorate. The law courts in Joburg, which were beautiful law courts, were just being neglected. The schools the primary schools around here that were always beautifully kept, just being neglected. You started to see, the street lights, robots, all of those kind of things. And when that starts to deteriorate and decay, then you haven't got the infrastructure. You need that infrastructure in order to build an economy. And I started to write articles, drawing attention. And my own community, and I'm talking about the northern suburbs community, they used to attack me. They used to go at me all the time, say, don't write negative articles, we need clients. I say, hold on a sec. I'm doing this because it needs to be addressed, not because I want to attack government. I'm saying you've got to recognize what's needed to be done to improve the economy and create the environment or platform that's on which we can grow. And I promise you, I went through a lot of issues, and I've got a lot of stories about presentations that I made where, they'd throw rotten apples at me and bananas and get out of here, and I was just trying to say, hold on a sec, know what know how economies grow, know what you need. And if we just create that environment, and I'm saying fix the roads, fix the conditions, make schools safe, make everything, people will start to spend. They'll start to invest in this economy rather than taking their money out.
And now you have the edge. For the full interviews and details behind these stories, head over to biznews.com. I'm Alec Hogg. Thank you for starting your morning with us. We'll be back again on Monday. Now go and seize the day.